Welcome to the Kapital News. I am your host, Alex Karitis. Today is Wednesday, May 26, 2021. Thank you so much for joining me. The title of today's podcast, A Financial Storm of Brewin. This is a question. I, of course, answer this in the affirmative. Yes, sirree, Bob. This is a financial storm of Brewin. It's just a matter of time before this house of cards built on a foundation of sand comes tumbling down. One central bank after the next realizes that they are trapped. Some politicians who have a better economic sense about them also understand that they are running out of runway and they are running out of time and they are desperate beyond belief. So the narrative is going to constantly change and shift. There's going to be a massive blame game operation underway when you know what hits the fan. We're going to get into some of these scenarios. Today, I want to talk, obviously, market performance. For the past couple of podcasts, I have been mentioning briefly COVID-19, Bill Gates, Dr. Fauci, Jeffrey Epstein, and to tie that into sort of a Chinese narrative in the Wuhan lab. So I'm going to kickstart this podcast with a brief discussion on those issues because I think that may very well be a narrative that gets used perhaps as a distraction, and it could very well be legitimate as well, and I think a lot of it will be. But this could be used as an excuse for why we may have some turbulence in the financial markets, in the broader economy, and I'll explain that in a moment. I also want to talk very briefly about the housing market once again because we had some major bank CEOs testifying before Congress answering some questions where questions posed to these individuals were about housing, whether it's in a bubble, is it stable, what's going on. So we'll get to that if we have time. I want to bring up again to this audience something that we still have to deal with. So despite all of the things that we have dealt with through the past couple of years and continuing well into this year, we still have to contend with the fraud cycle. And I'll refresh your memory on what that is too in a little bit. And then one of our fearless dear leaders, our Treasury Secretary, Janet Dingbat Yellen, was supposed to show up before a congressional committee to testify or to be a part of a conversation that dealt with small businesses. She was a no-show. She was required to be there. She didn't show up. Maybe it's because she is fully aware that her policies and that of the broader government and the Federal Reserve are screwing over small businesses. And she's like, well, they're not going to exist in the not too distant future, so this is just going to be a waste of my time, so I'm not going to show up. But at least finally you get a little bit of fire under the feet of some of these Democrats and Republicans both, who are upset with our Treasury Secretary, as they should be, but they should be upset with her for a whole host of reasons. This is the least of them. And then this week, at the end of the week, we're supposed to get some more inflation data. That is the talk of the town. One day it's inflation. The next day, it's nothing to see. It's runaway inflation. It's transitory. But it's always changing. They have to keep you on your toes. They have to make up crap to fill the airwaves, to make it seem like, well, there could be inflation. If there is, it's not going to be that significant. Back and forth we go. It's amazing. The disservice that a lot of financial media outlets do to the general public is a disgrace. It's a true shame. Because if I were to catalog the headlines that come across my Twitter feed or across an email or across some sort of push notification on an application that I might have on my phone, make your head spin. I mean, who's writing this garbage? Because that's exactly what it is. One moment it's this, the next moment it's that. You cannot square this circle. So I'll talk about some inflation data too. We'll tie all of this in. But first, again, COVID-19, Bill Gates, Dr. Fauci, Jeffrey Epstein. How does all this stuff tie together? Well, the reason I'm bringing this up is because we are witnessing a shift in the narrative once again with COVID-19. Okay, and obviously Dr. Fauci and Bill Gates in the United States have been the face of COVID-19 and some of the responses, the policies, the practices, how things should be handled now, how things should be perhaps handled going forward, etc., etc. Well, early on when COVID-19 came out, there was, of course, people who were speculating on where it came from, who may be responsible for this, if anybody. And if you went down that pathway, asking some legitimate questions that needed to be answered, a lot of people who were asking these basic questions were deemed a conspiracy theorist, a right-wing nut job, not to be believed, because it was all about the quote-unquote science. You can't question the science, even though that's exactly what science is all about, constantly questioning, always being skeptical, always asking questions. Now, of course, they have to make sense. Otherwise, it's perhaps be a waste of time, but you get my drift. Now, those questions are headline news. Well, maybe this did come out of Wuhan, China, one of their larger labs that are supposed to be secure. Well, maybe that's where this thing came from. Okay, well, if that's the case, and that's proven to be the case, then what happens from there? That's a big unknown, because that's going to have some huge geopolitical consequences. Did the Chinese authorities know that it came out of their Wuhan lab? And if so, why didn't they admit it? Why did they allow this thing to spread? Did they do that on purpose? Was this all intentional? Or was it something that went bad and they were trying to sweep it under the rug, and then it got so bad, well, it was too late, but they never wanted to admit to it? This has huge geopolitical consequences. It has huge economic consequences as well. I mean, we're already seeing a massive shift in supply chains moving. A lot are moving out of China. A lot of manufacturing facilities are going to other Asian nations. A lot are coming back to South America for the North American market. Unfortunately, not as many as we would like are coming back to the United States of America. But that's our fault because of the policies we continue to implement. A lot more should be coming back to this country, and that's how you're really going to start generating real growth, through productivity, through innovation, through investment. That's the basis of a sound and solid economy, not this funny money crap. You can print money, you cannot print production. And everybody is going to realize this in the not too distant future, and the lower you are on the income scale, you're already feeling it. You already understand this. But if you're a little bit above it, the higher above it you are, the longer it's going to take for you to feel these negative effects. But they're coming. Make no mistake about it. They're being felt the world over. The weakest links are breaking down first, and they're making its way up the chain to more developed economies. And we are definitely on that list. But if we want to talk about a potential financial storm of Brewin and how we can tie this in to COVID-19 once again, is if you get some sort of massive breakdown in geopolitical relationships. I mean, especially if you have some sort of next phase of this economic war that is already taking place between the United States and China, the two largest economies on the planet. So if it is now really in the open that nobody can deny that this is economic warfare between the United States and China, well, how do you think markets are going to respond? Okay, so now that may very well give cover to politicians and central bankers, because they're going to say, well, look, the markets came down. It wasn't our fault. It was because China released a virus. Look at what they did. And of course, we're going to have to retaliate. Of course, the United States and perhaps Europe will join, and India and other countries around the world. They'll say, look, we can't do business with China anymore. Or we're really going to have to look at our relationship. We're going to have to do a lot less business with them. What do you think is going to happen? That would be a convenient excuse if markets sold off and they said, well, it's not our fault. We had nothing to do with that. We were trying to save the economy with the Nobody Cares Act 1.0, 2.0, 3.0. We were trying to save the global economy with quantitative easing infinity. And it was working, they'll say. It was working. Look at all of these numbers. Look at the jobs data. Look at this number. Look at initial jobless claims coming down drastically. Inflation is in check. There's nothing to worry about. Look at retail sales. Look at housing prices at all-time highs. Look at stock prices were all the way up. Everything was fantastic. Yeah, it was those damn Chinese. Now, this is all speculation for me, folks, but I'm just simply putting this out there because this narrative is not circling around just for the hell of it. I do not believe in coincidence, okay, especially with these types of events. So what are they prepping us for? Furthermore, how does this tie in to Bill Gates? Why did he become the face of all of this? Yeah, sure, he's a billionaire, good for him. Yeah, he has a charity, and he talks, I guess, a lot about vaccinations and this, that, and the other, but why was he the face? Why was he put out all over the place for the past year and a half? And now, of course, he's going through that divorce. That was made public, obviously. But during that, and it's still underway, we started to hear some stories. Not on independent media, not on the fringe that you could say, oh, that was the left attacking him or the far right attacking him. No. This was mainstream media, such as Bloomberg News and others, coming out and talking about a connection between Bill Gates and Jeffrey Epstein. And of course, Jeffrey Epstein, was suicided. He killed himself. He stabbed himself in the back 50 times. In prison, in a very secure prison, as he was on suicide watch. He died. He died. And now we have police officers, security guards, who are responsible for his security, who are now singing a different tune, who are now saying that they falsified documents. So why is that story coming back into the mix as well? Because Jeffrey Epstein was a big player. Now, was he doing this on his own? Was he some sort of agent for the government, our government, the British government, the Chinese government, the Israeli intelligence service? I have no idea. But doesn't it make sense that he would be an agent for somebody? Because you're talking who's who. Billionaires, multimillionaires, celebrities, rock stars, actors. So you got Hollywood, you got the entertainment industry, you got finance, you got Wall Street, you have Silicon Valley, the who's who. You got politicians. This guy was blackmailing everybody with, primarily sex and I'm sure drugs and other things. And he's got these people on tape. And we know he has these people on tape because we know in his mansion in New York that every room in that household had cameras in it. And God only knows what he did in his other properties. It's a very interesting, I don't know if it's still on Netflix, but there was a very interesting documentary on Epstein that was put on Netflix. If it's still there, it's worth the time for you to listen to it and watch it. Very interesting, to say the least. But this may very well go down as the story of the century, maybe even a story of the millennia, because of the people who are involved with this guy. And there's speculation that Epstein, as powerful as he was, there are people who are even bigger than him, who do even worse things than what he was involved with, if you can imagine that. So is that going to be another story, another narrative, another excuse that will bring down markets and will allow politicians, some of them, and central bankers, if they're not implicated in some of this, to say, hey, we had nothing to do with this. Again, we passed the Nobody Cares Act 1.0, 2.0, 3.0. We love you. We gave you all those stimmy checks, remember? Donald Trump signed them, loved it, sent you a letter making sure you knew it came from him. Joe Biden, that idiot, did the same thing. Signed this, sent a letter, came from me. Aren't you happy? Federal Reserve, QE Infinity, and all the other central banks and everything else, as I just stated. Because they love you. They care about you. They want to make sure you're happy. Not our fault that Jeffrey Epstein got involved. Not our fault that one CEO here and another over there and this guy did this and that one did that. The markets just don't know what's going to happen, so they're panicking and they're selling off. That's not our fault. Could very well happen. Could very well happen. So it's just something to be mindful of. These stories did not just come up, go away, and come back again. There is a reason. And I am just trying to connect the dots. Again, this is pure speculation on my part as to why these narratives are coming back, but I think it's a logical connection that I'm making here because of how fragile the system is and how we know for a certainty that none of these politicians or policymakers are going to take any type of accountability, responsibility, or act as a leader. It's just not going to happen. So in order for them to find an excuse, well, here you go. It was China's fault. They released COVID-19 on purpose, by accident. Either way, we're stepping up our aggression, our economic aggression against them in a unified front with other countries around the world saying enough's enough. You got to let us in there. You got to let us investigate. Has to be thorough. And if you don't, there's going to be economic punishment. We're going to move our supply chains. We're not going to buy as much stuff from you, etc., etc. That could very well happen. Because the other thing that China might be doing is preparing for war. They are hoarding they are purchasing a bunch of commodities. Everything. They are purchasing everything. Now, they might be taking advantage of their strengthening Chinese yuan against the U.S. dollar. That may be part of it. But they are buying up a ton of stuff. Are they preparing for some sort of long winter? Are they preparing for war? Are they buying and producing a lot of steel to expand their navy, to build more tanks, more aircraft? What are they doing? Because they are not friendly, I can guarantee you this. And they know the smoke and mirrors show that they're running over there, which is even worse than ours, if you can believe it. Their economy is extremely fragile. And as we mentioned here a handful of months ago already, Chinese regulators came out and even admitted that their housing market, the Chinese housing market, was a bubble. But that was not going to be the problem because they wanted to set the stage for the blame game as well. And they also said, hey, yeah, we might have a bubble in our housing market, but guess what? The entire economies of Europe and the United States, they're entirely bubbles from A to Z. So if anything should happen in China, it's not our fault. It's the Americans. It's the Europeans. The stage is set. The blame game will unfold instantly. The people that caused it will not take responsibility, so it's always going to be somebody else's fault. That's where all of this comes full circle to me. That makes sense? You agree? Let me know. You disagree? You have another theory? Post it. If it makes sense or is interesting, I'll share it with the audience. I'd be very interested to hear your thoughts. And then you have Dr. Fauci, too, in the mix. Wear a mask. Don't wear a mask. Don't wear them. Wear one. Wear two of them. Wear three. Wear 300 of them. Oh, well, maybe we funded Wuhan. Maybe we didn't. Oh, Senator Rand Paul shows evidence that you did. Oh, yeah, maybe we did. I couldn't remember. I don't know. I'm not involved in all of these decisions. So you have some of these people starting to be thrown under the bus. The question again is why? Because of the narrative. Because of the narrative. The powers that be, the true powers that be behind the system, behind the curtain, will sacrifice who they have to sacrifice to keep their grasp, their death grip on power and control, because that's what it's all about for them. So I just wanted to mention that. COVID-19, Gates, Fauci, Epstein, what's happening. And don't forget, Jeffrey Epstein, yeah, he's gone. He's dead. But his girlfriend, his mistress, his handler, we don't know what she really was to him. Ghislaine Maxwell, she was apprehended by the federal government, by the FBI last year, right? She's being held by U.S. authorities somewhere, and we still have to deal with her trial, assuming she doesn't, stab herself in the back 50 times either before she goes to trial. Will she sing like a canary? Is she going to keep her mouth shut? What's going to happen? Will some of these other people involved, whether Bill Gates or many, many others, you got Bill Gates with this guy, you got Bill Clinton and so many other people, running around all over the place with Epstein. This is the who's who. Okay? Will be a big story. And how nice, too, right? Because this could be, while it could be very true and very damaging and very devastating, it could also serve as a massive distraction from the real power players pulling on the strings behind the scenes. Okay, so just be mindful of that. Let me get to market performance here. So we have the dollar index relatively flat right now overnight at 90.02, 90.02. So still flirting with that 90 handle. Anything below 89 is going to be quite problematic in my estimation. We'll see if we get there. I think we probably will at some point. Not too much movement overnight in the Forex market. However, we do have Bitcoin down about 3 percentage points, trading at $38,200 a coin currently. Overnight futures trading, we have the the Dow Jones Industrial Average flat. Same for the S&P 500, and the NASDAQ 100 is also in the red, down about 0.1%. The cash trade in Japan also selling off slightly, about 0.4%. A mixed bag across the pond in Europe once again today. Nothing major to the upside, nothing major to the downside. Cash trade in Australia putting on a gain of about 0.25%. Chinese stocks also up about 0.2%. And Indian stocks keep climbing higher as well. We have their exchange at 51,000 points. So despite what's going on there with COVID-19, stocks couldn't care less, I guess, because they just think, well, their monetary authorities will just continue to do more. Nothing to see here. So that's that. On the commodity front, we have a lot of the commodities selling off here. We got WTI at $65.97 a barrel, Brent at $68.56, natural gas at $3.01. So once again, breaking that $3 handle, that three handle. We have gasoline at $2.14. Gold and silver are both up overnight currently. Gold $1,901 per ounce. Silver $27.74 an ounce. And again, as I have been stating here, I like the price action on gold and silver. We are very close to the end of the month. I would love to see gold close at 1,900 or above for the month, and I would love to see silver close at or above $28 per ounce. I think that would be very solid, technically speaking. As far as the fundamentals are concerned, it's full steam ahead. But there obviously is this ever-changing narrative. And this is an opportunity for those who can stomach the volatility and truly believe in precious metals. Again, this ain't their first rodeo. That's my argument. Plus, so many of the other fundamental issues, and now the technicals are also much more in alignment now than they have been in the recent past for the precious metal space. And I like that they are taking out these technical levels of resistance bit by bit, one by one, continuing to climb. And they're not getting a lot of media attention, because it's not a craze. It's not the fascination and the speculation like Bitcoin, okay, and all that nonsense. So again, it's more distraction. That's what it is. You have to keep your eye on the ball. So pay attention to precious metals. They're sniffing out this financial storm that's a brewing. Believe me when I tell you. Copper up currently overnight as well, $4.57 a pound. Lumber, $1,339 per 1,000 linear board feet. And to round it out, Uncle Sam's 10-year junk note is yielding 1.57%. So still range bound as to where we have been for the past couple of months, but at the lower end once again. And that is still the question that needs to be asked of Federal Reserve officials, because they told us that rising yields were a good thing, indicative of growth and of a strong recovery. Okay, well then conversely, if we should see falling yields, isn't that going to mean that what? The recovery is non-existent, it's slipping, are we heading into contraction? What's going to happen here? Need to ask that question. It needs to be answered. And then as we were talking yesterday with respect to the housing market, we have mortgage applications drop as interest rates rise. Mortgage applications in the U.S. fell 4.2% in the week ending May 21st, the biggest fall in 7 weeks as interest rates edged higher, according to data from the Mortgage Bankers Association, the MBA. Well, who would have thunk that, right? I mean, not only do we have all-time high housing prices, but now we have rising mortgage rates as well. People can't afford it. They can't even afford these payments now. I mean, that was sort of the argument. Well, the interest rates are so low, we can afford the payment. Now they can't even afford the payment. And that's not how you're supposed to look at it, but that's how we do it here in this country. And, this leads to some of those questions by some members of Congress to some CEOs of major banks. Is there a bubble in the housing market? And Goldman Sachs, they said, yeah, I mean, it's getting a little bit frothy. and JP Morgan Chase, their CEO, Jamie Dimon, he said, yeah, there is a bubble. It's getting a little bit frothy in parts, but it's not like the subprime crisis, which is what I explained yesterday. And he explained it basically the same way that I explained it to you, which I believe is correct, that there is not as much leverage in the housing sector when it comes to subprime. Okay, and you have to recall, subprime is much hype, and as much as it's discussed, it was not that big of a portion of the overall housing market. It wasn't. But that just goes to show you how dangerous leverage can be in a system. So while it's true that we don't have the same type of subprime fiasco now as we did in the lead up to the great financial crisis, there is even more leverage in the system in its entirety. I'm not just talking the housing market, I am talking the system in its entirety. So, okay, we got a lot of cash buyers coming in, and cash is 100% equity. You own the house. It was $500,000. Here's $500,000 cash. It's yours. You have it. There aren't mortgage payments to be made, etc., etc. That's a big difference, and that's why I continue to argue that the housing market still has some room to run to the upside. And as we discussed yesterday with the Case-Shiller Index, whether you're talking about the National Home Index, whether you're talking about the 20-city composite or the 10-city composite index, when you look at the graphs, you are noticing the slope of these lines highly reminiscent of where they were in the lead-up to the subprime crisis and fiasco. That's very important to mention. And we're seeing those year-over-year increases, as I discussed yesterday as well, that you have to go back to the great financial crisis, to the subprime fiasco, to get a legitimate reference point. That's how crazy this is. But again, they'll tell us that there's no inflation. They'll tell us that there aren't any negative side effects or consequences to anything that they're doing. However, I do have to mention, and I have to give credit where credit is due, that finally we did hear from Jay Powell, and I mentioned this before when it happened, after the last FOMC meeting in his Q&A session. He did admit that housing prices being where they are can be problematic because it can be pricing out a lot of people. And oh boy, is it pricing people out of the market. And here's the concern. So even if you were to say, oh, well, it's higher prices, that's the problem. So if prices go lower, though, then all these people can come in and they can afford these homes. Not so fast. Because you have to ask yourself the question, why are housing prices going down if that should end up being the case? If it's a slow and steady decline, well, then perhaps that might be the case. That now prices coming down, slow and steady, somebody can get in there, they can afford the house. All right. What happens if it's sudden? What happens if it's a crisis? What happens if something broke within the system, whether it was in the housing market or somewhere else, but because there are so many bubbles and because all these dominoes are set up, one triggered the next. And now you got a bigger problem. So yeah, you're going to see lower housing prices in this type of scenario. But if they've come down because a bubble has burst, do you really think a lot of people are going to say, oh, good, housing prices are lower, let me go buy, in that type of scenario? Because you're going to have banks in that type of scenario tighten their lending standards even more than what they are now. And if you should have bubble after bubble starting to burst, what do you think is going to happen to the jobs market? So people aren't going to be as confident in their jobs. Well, you need steady income to make that mortgage payment. You see where I'm going with this? So yeah, you can't just say we got higher housing prices, so therefore the solution is lower housing prices to get more people in so you can afford it, so they can afford it, so you're not pricing out an entire generation of people, which again is going to turn into a political quagmire, believe me when I tell you. It's not that simple. It's not that simple that, well, just prices have to come down. Yeah, well, that might very well happen, but why will they come down? So you have to pay attention to that as well. And then the fraud cycle, right? As we were reminded by Jim Chanos, who I've mentioned here many times before, hedge fund manager. He's well known for his short selling bets more than anything else. And he's also at least a visiting professor, I believe, at Yale University of Financial History. And as he tells us, and rightly so, the fraud cycle follows the business cycle. Now, this is a true perversion of the business cycle. It's really the crazy cycle. But regardless, when this thing falls out, and it will, when the bottom falls out from it, we are still going to have to contend with the fraud cycle. Can you imagine how much fraud is taking place in this system right now? With all of this funny money just covering up so much fraud? How many Ponzi schemes are at work right now? How many millions, if not billions of dollars have been ripped off from Uncle Sam, meaning you and me, the American taxpayer? How many people who were expecting to collect unemployment insurance benefits got screwed because somebody stole theirs? Okay, that's the small stuff right now. Wait till this house of cards comes tumbling down, and we're going to have to contend with all of the fraud that existed within the system. And we're also going to have to contend with all of the zombie corporations. We're about 25% of all U.S. corporations, small, medium, large, classified as zombies. If you have one bubble after the next popping, how are they going to be able to make their debt payments? They're not making them now. That's the problem. That's why they're zombies. They are just generating enough cash flow to pay their debt obligations, and some of them aren't even that good. They have to continuously go back to the bond market or go to the bank or find investors to continuously give them more cash to finance their operations because they're not generating enough through their general business operations. 25%. And the further we kick the can down the road, the more Uncle Sam throws into the system, the more the Federal Reserve throws into the system, the more zombies we create and the further we perpetuate them. That kills economic growth. Kills it. But they don't want to deal with the pain. They don't want to take accountability. They don't want to show leadership. So this is what they're going to continue to do. They're going to continue to muck up the system, and we're going to have to continue to deal with it until the system collapses. And then when that happens, all of these people, can you imagine 25% being classified as zombies? How many people is that employed? I might have to see if I can find that data. There's a ton of people. Now, that doesn't mean that they're all going to perhaps lose their jobs, but it's going to be a significant portion of them. And then that's going to play into the whole game scenario that I've been talking about here, since this podcast has been online. It was outlined in our book, The Cynic's Guide to Investing. It's all about consolidation. You're going to have fewer choices, which means the choices that are left are going to have more pricing power. And what do you think they're going to do? You think they're going to be nice to you and give you a break? Hell no. They're going to raise prices, which we're already contending with anyway. And that brings us to where we're going to be at the end of the week with more inflation data that comes down the pike. What's going to be the story? Better than expected? Worse than expected? The worst is behind us. The worst is ahead of us. What's going to be the story? They're just going to make stuff up. That's all it is. It's just a story. And as I stated yesterday, you got these idiots out of the Federal Reserve telling us, a handful of months ago, there's no inflation. Then there's not going to be any. Then it'll be transitory and it'll be minor. Then it'll be transitory, but it might be a little bit more significant. But that's only because of how bad things were in 2020. Base effects coming into play, nothing to worry about. And now you got the Vice Chair, Richard Clarita, coming out and saying, if there's runaway inflation, we can handle it. What? How do you go from nothing to runaway inflation? Well, that's because we're operating as a first world banana republic. That's how. They're telegraphing what's coming. You just have to pay attention. Don't live in la la land. You better prepare yourself. Okay? Because here's the other beautiful thing about inflation and how it just screws everybody over. And especially older people and people who are collecting Social Security. Because you had the fantastic privilege of paying into the system for 30, 40, 50 years, however long you worked, feeding into a Ponzi scheme, and then they change the calculation for inflation, and your Social Security benefits are supposed to have a cost of living adjustment built into them, which of course is going to track with inflation, the CPI. Well, because they've changed the calculation, they've changed it so they can screw you over once again. It wasn't enough to take your hard-earned money for 30, 40, 50 years of your working career. They got to screw you out of what you're actually supposed to earn in benefits. Okay? And of course, this wasn't your money socked away somewhere, gaining interest, just waiting for you to retire. Oh, no, 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 no. The money you're receiving is from your children and grandchildren because it's a Ponzi scheme. That's how it works. So they screw you over once you start getting those Social Security checks too, because it doesn't fully account for inflation. They'll tell you, well, inflation's 2%, so we'll increase your security check by 2%. Meanwhile, the real rate of inflation was probably closer to 4, 5, 6%, maybe even worse, depending on what time it was. But they use the word inflation, and people think, oh, well, inflation, I don't really know what that means. It kind of sounds like a good thing, right? Inflation, you inflate balloons. Let's have a party. Must be a good thing. Maybe what they should start saying is devaluing your currency. Oh, different, isn't it, when you listen to it that way? Well, when you put it that way, Alex, it makes it sound not so good. Inflation I can deal with. Devaluing my currency, I don't like the sound of that. But that's exactly what it is. And it takes more dollars to buy the same amount of goods. And as I've been stating to this audience, you better start paying attention, not just to the cost of the things that you are buying, but the amount that you are receiving as well. Get a notebook out, start charting it down, seeing if there's differences, and calculate the difference and account for all of those changes, the price difference and also the volume difference, because I'm telling you, that's what's going to happen if it isn't already. So there you have it. We covered a lot of ground, as we typically do. Is a financial storm a brewing? I most definitely say yes. What say you? Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Kreitis. Godspeed.